rempite.
Hello everybody, welcome back. So let's have a look at Bitcoin. We're pulling back. Yesterday we were saying we're looking for a retest, a bullish retest of its breakout, and potentially maybe even the 10 exponential. So we're looking for daily closures on this one, on this current uptrend. If you can call it that. I suppose it is an uptrend. Since reclaiming the 10 exponential, we have used it 1, 2, 3, 4, 5 days in a row before we had this move outside of this descending trend, this consolidation trend line basically. And we were saying yesterday how we were looking for this to have a back test on it to see what kind of reaction we get. So on its most bullish outlook, I suppose, you'd be looking for it to close above here and then meander its way up to 46,000. This is all possible. It's definitely possible. But if it doesn't happen, it's not too much of a big deal because there's quite a lot of supports below us. Moving averages, horizontals, and CME gaps, and also the worst case scenario. Well, it's not the worst case, but still, if you've got your bullish hat on, 38,500 would probably be a decent area to try a big long if we come down here. So there's reasons why I think measuring these lows out here is quite interesting. So the money flow index is something that I use quite often to gauge tops, not so much bottoms, although that can have reactions at bottoms. So if we look at the money flow index on the daily here, and again we're going to look at daily versus weekly. On the daily we're quite high. So being a volume indicator, this invites people to sell at these levels. Order books being quite high, getting decent bang for your buck. If you want to sell your Bitcoin, there's plenty of opportunity to sell it here and get decent value for money. Effectively, that's what the money flow index is used for. When we do these live streams, especially when we're super turbo bullish on things and things are just going up and up and up, and people are saying buy the dip, buy the dip, buy the dip. Normally it's better to think about stopping buying the dip the higher the money flow index goes. And we've had a decent sort of move from the lows over here all the way to the highs. And again, the lows being marked off not perfectly. This is why I say the money flow index isn't great at spotting lows. It is better at spotting highs, and we are quite high. So we are inviting sells to take place over here. So that is basically something, a cautionary indicator to say we're quite high here. It's unlikely to expect us to go a great deal higher before retracing someone on the money flow index. So that is your daily money flow index. So again, on the daily, it does make you consider that these lows are quite likely, maybe even these lows are quite likely, before we start to bounce and make our way to what I would say one of the most important levels to reclaim, which is 46,500. It's also the 200 exponential on the daily. So it does invite the bears to sell here or to short here as liquidity is quite high on the daily. If we go over to the weekly, though, we get the absolute polar opposite. In fact, this is surprisingly low. This is the lowest the money flow index has been on the weekly here, on the Binance chart, which goes back prior to the bubble pops. So we get very decent reads here for our bubble pops, and this is something we always look at, especially when we were doing the alt seasons and stuff like that, and things look like they're going straight up to the moon. I would always say, look, money flow index, it's not the be all and end all, but if you want to try and gauge tops on something, or at least protect some of those gains that you've made, you do it when you see a money flow index reaching over 95, definitely. And we get this on Bitcoin here, even on Bitcoin. So we got a bubble pop here 2017, bubble pop here 2019, bubble pop here 2021, and each one of these marks a particular top, really. So get your top there, out. Get your top, well, I mean the top was being marked over here, but yeah, get out. Get your top here, get out. Now this went on further, and this obviously went into an alt season, and that's something that we played. So it's not the be all and end all, but it did mark a particular top for Bitcoin, and the money went into altcoins thereafter, and like I say, we dealt with that appropriately. But it's a good way to generally say, all right, the fun's finished. Now you might think that getting out here is like a bad thing because it's 43,000. You could have made another 40%, but you'd already made a 300% anyway. But we're talking about lows on this occasion, so let's backtest these lows, because again we can see that this is a weekly chart. It's not going to give you perfect entries or exits. It's going to give you a rough guide, and lows aren't really very good for money flow index, but it is quite interesting to backtest this. So we got a low here, right? So what happened on this low? We got a wick low here, didn't we? So the wick low and money flow index low, and if we were to measure this from the bottom to the top on that wick low to its next high, again, this is in the midst of a bubble pop, so this is kind of different. We've got a 93% move, so that's not too bad from that low there. Next low was marked on this bit over here, and this doesn't look much. This is probably, I think I measured this out, it's probably about a 30% move from there to there. Yeah, it's just, so it's not much, and it doesn't mark the absolute low because we broke down by 50%, so it's not a be all and end all. And remember that these lows aren't as significant as the current low that we're at the moment. So the next major sort of dip down to relatively low oversold zones on the money flow index was over here. So on this candle we did come down a little lower, but then we did find a major reversal. So we'll measure it from here. We sustained a potential 8% loss to a gain of over 100%, 120%. So it can give historically relatively decent, I guess, guides at what could be more upside than downside on most of the occasions, and this is the lowest it's been, you know, on this chart, which is going back about 3 years, over 3 years now. So that makes it feel as though, yeah, if you base it on that and backtesting those results, that yeah, we could easily come down to this level and this level, even though we're quite oversold already. That a major reversal could be pending, right? A major reversal on the weekly could be pending. But while we're below the 51,000, which is the 20 simple moving average on the weekly, the bears have control. But interestingly enough, if you just go to the monthly, the bulls have control. We got a decent reaction here. We've not closed below the center of the Bollinger Band, so the bear market technically isn't that dramatic yet. We've not closed below it yet. So the bulls have control over the monthly, which is an interesting sort of case to make. Although momentum does appear to be leaving and continuing to leave on the monthly, so it's, you know, the bears could easily take that if they really wanted to. It would just take some geopolitical or economic Federal Reserve monetary policy to change all that. But for the moment, on a daily, yeah, the bears are being invited to sell here as the money flow index is high. It's much better at spotting sort of areas to sell than areas to buy, but the weekly does point to quite a large reversal, even if it's just a bounce all the way up to the center of that Bollinger Band on the weekly. So interesting reads taking place. So if we're going to just put, yeah, let's find a little bit of a middle ground. What's the 3 day saying? What's the 3 day on about? So the 3 day is showing money flowing coming back in. So higher highs, higher lows. That's quite nice. We've also got 1, 2, 3, 4 green ticks on the histogram there with a positive cross, all below the 0 point. So nothing majorly bullish, but it is showing momentum changing in favor of the bulls on the 3 day. So conflicting signals, conflicting ideas here, leading me to believe that if I had to put my money on it right now, which effectively is what you're doing when you're trading, I would be in favor of short-term downside and long-term upside, really. So we're already, as we're making this video, coming down below the 10 exponential. We want to see where we close. We could come down to the 21 here, which is currently 42,000. We could come down to the center of the Bollinger Band, 41,500 more or less. Then we could come down to the CME gap, so between 40,500 and 40,900. Or we could come all the way down to this area here, which I think if we did come down to there, that would be the biggest opportunity for a long position, and maybe a long-term long position for 38,600. That's where we could at least find a decent bounce, which takes us up to this level here, and that's the 46,500. So there's opportunity here, but it's also a wait and see. We don't know exactly what's going to happen. We could have positive reactions at any point in the air, all the way down here, all these supports here to this major level of support. If this breaks though, sweeping the lows, bears really do go to town, and we shouldn't really be looking to sweep these lows at this point now. We do really want to maintain some kind of structural integrity after breaking the downward spiral that we had in this giant consolidation. Now, if we are talking about things like Russia and the Federal Reserve monetary policy, then yeah, I think monetary policy has largely been priced in. Across the board, not just with Bitcoin, but with everything. And all we're waiting for now is, a bit of clarification. What is it? What is the rate hike? And what is it that you're going to do? So we can base our life around that. Basically, Russia is literally like anything could happen over there. Absolutely anything. And that will obviously have a reaction you know, across the board, and we can't account for that on the chart. That's unchartable. You can't chart that. Do you know what I mean? But federal policy, Federal Reserve monetary policy, I think has mostly been priced in. The worst case scenario has been predicted, and I think that's what we're looking at here. But on a chart basis, TA basis, then yeah, the sweep of these lows, maybe these lows, and then a retest of here. See what reaction we have here, reclaiming that center of the Bollinger, the 200 exponential on the daily, and then maybe moving up to the 51,000, which is where the center of the Bollinger Band is, and that's basically it. Once that's been reclaimed, the 51,000 area, the bulls basically have it, and it shouldn't be too much of a problem to continue up from that level. So that's the deal with Bitcoin. Hopefully that's okay with you guys. Like I say, we do have to be careful with all the trades that we do, especially with the altcoin trades. We do have to take profit, especially on the altcoin trades. But for Bitcoin, I think that lows will likely form, and decent reversals are probably the most likely scenario at this level, at this rough zone. And if we do come down through the CME gap to the 38,000, that would be the best time to try a leveraged position for what could be the full-on reversal all the way to the moon, and then Jupiter, and maybe even Uranus. Right, I'll leave it with you there, guys. Thanks for watching. If you want to join the Telegram, link in the description, links for everything else as well, all there. Yeah, have a nice day. Take it easy.